Right. So this is a follow-up video from the previous one. Similar sort of thing, but different again. This is Bitcoin, last one was XRP. So before I start this, I just want to say a big thank you to ICT for everything you put out. It's phenomenal. And after the end of this video and my understanding of it, you'll see why. But yeah, just thank you so much. Most of it resonates with me because I like the way it's explained. Like, it's exact, it's precise, it's not easy to understand, and that's why it's so good. Nothing good ever comes easy. So thank you ICT. I take no credit for this at all. I'm literally just explaining my understanding of his teachings. Again, I've been studying the mentorship for about 5 to 6 months, and I'm only up to episode 10. I've just started episode 12, so I've been watching the videos and smashing them just again and again and again until it sinks in. And just the last 6 years have culminated in, I guess, yesterday and the day before, in just some experiences that are amazing, and which I'll explain in detail a little bit later on. This video is going to be similar to the last one, where I'm just literally spitting out my thoughts, my thought process as I work my way down through the time frames, and yeah, again, visually how I narrate this, based on my understanding of ICT's teachings. Again, this is my understanding. I take no credit at all for this. It's just his teachings, and it's incredible stuff. Anyway, let's start. So first of all, we have monthly time frame. We have premium and a discount. Prices and a discount, so we're looking for longs. Okay, we have 2 monthly fair value gaps. Okay, above old highs, liquidity. Weekly time frame. You can see the monthly fair value gap there and there. And I've introduced the bias, which is 9 and 18 EMA, which is in one of ICT's other playlists. It's just a 9-18 length EMA on a weekly time frame. It's just a quick down and dirty way of establishing a bias. That is it. I don't use this to determine any trades or anything at all. It's just literally to tell me which way price is going. You can see the lines are going down, so price is going down. Okay? Suggesting that price is going down. So on this weekly time frame, I'm looking for imbalances. Okay, what does price need to rebalance? So during this price leg up, okay, price leg retraced to imbalance on some lower time frames, to imbalance some price action in here. And during that price leg down, because we're bearish, this was a strong move down. During that move down, price created an imbalance, and then price retraced up to the premium to rebalance that imbalance before moving lower. Okay, so there's nothing more on this time frame, in my limited knowledge, to look at on a weekly. So looking at this, just price is going down. Okay, prices rebalance this on a weekly time frame. It's just telling me prices rebalance this, and now we're targeting this imbalance. Okay, plus the sell side liquidity here. Okay, once this candle closes, if it closes something without going any lower, I will label this as sell side liquidity, because relatively equal lows. Okay, this candle has not closed, so therefore I'm not doing anything with it. Daily time frame, a little bit more detail on this. So here's that weekly fair value gap, that price rebalanced, but there's still a fair value gap here that a daily on the daily time frame, that price hasn't completely rebalanced. So the lower end, the upper end of that fair value gap there's still liquidity here because the high hasn't breached that. So price or the algorithm hasn't rebalanced this imbalance completely. Okay, there's a small daily imbalance here, and this is in a premium. So if the market gets to this point, I'll be looking for sells. Okay, again that daily bias, or that bias on a daily time frame. Okay, pointing down. So yeah, I'm looking for sells. Right. So here, because this candle's closed, okay, below these lows was relatively equal lows, support. Price then ran those lows, ran those stops, and then retraced higher. We're going to look at that soon. Now that candle is closed and retraced higher, there's relatively equal lows here and here. So there's now sell side liquidity here below these lows. Retail traders see this as support, and the fair value gap there. So there's a lot of sell side liquidity here for the algorithm to target. There's also this daily fair value gap here. So I'm looking for the algorithm to rebalance this to stack enough liquidity to target these lows. So that's my framework that I've established, monthly, weekly, daily. That's all I look for on those time frames, to establish a framework of, or a range of where price will move to. Okay, so now on a 4 hour, I'm looking for refined areas where price is going to. Okay, so again, is that buy side liquidity here, and funnily enough, the daily fair value gap here that wasn't completely rebalanced. The weekly was rebalanced, but the daily wasn't rebalanced. There's a 4 hour fair value gap there, which funnily enough is the leftover of the daily fair value gap. So the algorithm has left that alone. This was a news event, but that's separate, right? So when price retraced up to rebalance this weekly fair value gap and take the stops above here, okay, it pushed strongly. We're in a bearish market, so we can expect some volatile movement lower, as you can see. When the price leg retraced here, it left these imbalances, okay, the daily fair value gap and the 4 hour fair value gap. So we can see there's a little rectangle where the fair value gap 4 hour and the daily and the midpoint separating the premium and the discount, where that all interconnects. So that's a point of interest when price gets to that point. Okay, there's also this here, so there's liquidity here, here, and here. Now above these relatively equal highs is resistance. Retail traders see this as a resistance. Price went lower here, 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 here. It's a strong level of resistance. So at some point in the future, I'm looking for price to come up here, grab all these stops and go lower. Okay, but when that happens, that's what I'm waiting for. Now, when I looked at the market the day before yesterday, this is what I saw. So we have these relatively equal lows here, and this is the beauty of hindsight. Okay, I'm just narrating what I saw as it happened. Okay, so I saw these relatively equal lows, and I was waiting for a displacement. Okay, dropping to a lower time frame, that's where I got this displacement. Okay, price ran lower, took out all the sell side liquidity there, and stopped there, thereby creating more relatively equal lows here. So now we have sell side liquidity resting below here. So that's displacement. So the market displaced lower, it's taken stops here, and now I'm looking for it to rebalance up here because we have a 1 hour fair value gap here. The market did exactly that within something like $8. Okay, so I think the high of this is $8 less than that point. So, and when the algorithm rebalanced this, it took all the liquidity from these relatively equal highs here and here, where retail traders put their stops. Okay, so now the market's taken liquidity out of both sides, so it has liquidity to move in a direction, which is what it needs. Okay, I watched this, and then the next day I saw this had happened. Alright, so now I'm looking, now I'm looking for a trade. And again, this is a top down. Okay, so we were on the monthly and now we're on the 1 hour. Okay, I've had my framework established, but I'm refining, going to smaller time frames to look for entries. So what I didn't label on the 4-hour chart was there was a 4-hour order block through here. So there's 4 candles on that 4-hour order block, all consecutive red coloring. They're all consecutive bearish candles, so something similar to that. So that's my bearish order block on a 4-hour time frame. Why? Because we have that run on liquidity and we have consecutive down close candles. Those two conditions are an order block. Okay, so when price retraced higher and rebalanced this fair value gap, it created imbalances higher. Okay, so there's an imbalance here which I haven't marked, but there's a very small imbalance here and one here, which is also inside a higher time frame 4-hour imbalance. So this was important. When I saw this had happened, I was anticipating the market or the algorithm to rebalance this area, and it did that, exactly that, and filled it in completely right there. So now that this has happened, the market's taken both sides of liquidity. Okay, we're going to look at this because this was the breakthrough. This is what I want to, I guess, point to. Now that the market's taken both sides of liquidity, what's going to happen next? I don't know, but the targets that I've marked on a higher time frame, when price gets to that point, then I'll look for a trade. Okay. Again, noticing the areas marked from the higher time frame. We have the liquidity there. So down to a 15-minute time frame, larger point. So on this time frame, we have retail would see this as a bull flag, right? Prices come up, consolidated, and then moved higher. Okay, so retail would think, oh, we're going higher. Okay, and then price starts to break down. We have a 15-minute order block here, and when price starts to break down here to rebalance this imbalance, okay, it also created an imbalance here, very small one there inside that order block. Okay, and then price came up to rebalance. The algorithm went higher to rebalance this. As it went higher to rebalance this, it created an imbalance here, which it then rebalanced and filled, creating a big imbalance here, which it then rebalanced on the way up into this 15-minute order block. Now I'm going to dive into the price action through here because I was watching this and I was flowing with the market, and it's a surreal feeling when that happens, when you can see both sides of the market, what's actually happening, and people who trade with retail methods, what they would see happening, and then knowing what the market's going to do and why. And it's, yeah. So 1 minute time frame. I was watching this develop. Okay, and I think about here was where the magic started to happen. So as price broke down, I was thinking, okay, retail traders, they're going short, you know, price is at resistance and price is breaking down. Okay, and here's that fair value gap created on a 15-minute time frame. Lots of little imbalances in there. Okay, so you can expect, you know, I was expecting price to get to this point, to rebalance this at some point. Now price came down here and started to form this. I saw this move up, and then when it came back to here, I started to see the bear flag, and I instantly thought, oh, we've got a bear flag, we're going down. You know, retail traders think we're going down. Okay, and the market did, right? The market broke to the downside. So retail traders see this bear flag, okay, and oh, we're going down, market's going down. I'll put my stops above here, relatively equal highs. I'll put my stops above here, okay, and then we're going down. Oh, the trade's safe, it's okay. Okay, cool. I'll walk, you know, the market takes this low and starts to consolidate a little bit, okay, and I'm thinking the market's just rebalancing this area here, okay, and while it's rebalancing this, it's creating little, you know, you can see a little imbalance there, so the algorithm has to come back and rebalance that. When it comes back to rebalance that point, there's going to be little tiny rebalances in there that it's going to rebalance here. Now when it does that, it also creates relatively equal lows here. Retail traders will see this as, oh, it's just a pullback. Okay, so straight away you have two different parties of retail traders. Alright, retail traders going short, retail traders going long. Okay, relatively equal lows. Okay, so the algorithm is engineering liquidity to entice or induce retail traders into the market. The market breaks past these lows. Now retail traders who are going short, okay, the retail traders who are going long, their stops have been hit. That's what happened here. The retail traders going short, they're putting even more money on their position. Oh, price is at resistance now. It's resistance here, this is a strong level of resistance. Oh, and look at that. Another retest of resistance. Oh, and the market's going low. I'm going to put even more money on the trade. Alright. Meanwhile, retail traders who are going long are seeing this as, oh, this looks like a strong level of support. Price pushed through this, but it went all the way back, so, you know, we're going to go higher. So both sets of retail traders are confused, and I'm watching this happen, okay, and all these different little retail signals are flying through my mind. Like, look at this, we've got equal highs here, equal highs here. What's this? A bear flag, bear flag, bear flag, and a downtrend, right? Oh, we're going to go lower. Retail mindset. The algorithm is engineering this to entice or induce retail into the market, okay? So suddenly we start an uptrend, okay? I'm watching higher highs, higher lows. Again, retail, higher highs and higher lows. Not ICTs, higher highs and higher lows. Okay, this is just the algorithm moving, right? You can see there's a little bit of an imbalance, which price immediately rebalances and then heads higher. Okay, rebalancing all the little imbalances here and here and here. Now retail traders going long, they see this, you know, let's draw a trend line, point. Oh, we've got an uptrend. Okay, this downtrend's been broken, and now we have an uptrend, so, you know, let's enter long. Oh, this is just a pullback, we're going higher. So, you know, retail enters, and we have the equal highs, we have the equal lows, and it's starting to look a little bit like a bull flag. Bull flag from an uptrend. Oh, we're going higher. Alright, now you can see on the screen what has actually happened, but I was watching these candles print and I could see exactly what was going on. Okay, this isn't hindsight, and there's a photo soon that will confirm this. Alright, but so we have this bull flag that's forming, and we also have, kind of looks like a pennant, right? So you have a downtrend, you have a pennant. Okay, so we're going short. This area here is just a pullback from, you know, from going short. This is a pullback, and now we're going lower. Okay, so if retail was going lower, but retail was going higher, the algorithm's just engineering confusion to entice retail into the market. So I'm watching all of this market structure print and knowing exactly what retail would think. And that was when, like, this area here just hit me. I was literally flowing with the market, and I was watching these print, and I was thinking, you know, okay, equal highs here, that's going to get ran soon. There's equal lows here, you know, that's going to get touched, or that's going to get broken. Oh, price is squeezing. Let's throw on some Bollinger Bands and MACD cross, and look at all this retail indicators. But a lot of retail traders would be confused. What do? I have so many conflicting signals. What discipline do I follow? You know, what do I, you know, do I take a trend trade? Like, oh, this uptrend has been broken, so I'll draw another trend line. Oh, that looks good. We're going up again. And just knowing the confusion that retail traders face when looking at this. And this is the 1 minute time frame, okay? Not, you know, there's many different ways to express yourself in the market. Most people trade the 1 hour or the 4 hour time frame. Okay, the 1 minute time frames is just fractal. It's just a much quicker version of what plays out on the higher time frames. So the algorithm engineering all these conflicting retail signals, when all it is actually doing is rebalancing imbalances through here. Because you can see fair value gap. The algorithm needs to rebalance that. When the algorithm moves higher to rebalance it, it creates further imbalances through here, which are rebalances yet again. But retail traders don't see that. They see their Ichimoku, they see their support and resistance, they see their trend line, they see all of that. And the reason I can understand this is because I've made money and I've lost money on those very same indicators, on that very same retail mindset. And I blame myself for it. But that's separate. Okay, all it is just an algorithm that is balancing and rebalancing itself and garnering liquidity to move in a direction. Okay, so I'm going to take your attention to here. So again, these had all played out. The market was moving higher to this third level of resistance. Okay, relatively equal highs. You know, short traders are going to put their stops above this point, but there's still liquidity inside this 15-minute fair value gap to be rebalanced. There's still an imbalance to be rebalanced. The fair value gap is inside 15-minute order block. So when price got to this point, in my mind, all I was thinking was that retail traders are so blindly confused right now, they don't know what to do. So there's only one thing left to do. The market needs to rebalance this. The only way it can rebalance this area is if it garners liquidity from here, below these lows. Okay, smaller time frames, the 30 second, 15 second, 45 second, even the 3 minute time frames, there will be imbalances here, and that's what the market was targeting. Okay, so when I watched this play out and sitting in front of the computer and just flowing with the market, it just clicked in my mind that we're going down. Okay, because that was the only logical point left to do. Okay, retail traders were so confused, right? So market went down to rebalance, more imbalances here, creating imbalances on the way down. Okay, and then a lot of retail traders would think, oh, we're going down, this is the final countdown, so, you know, let's go down, let's go short. and they put all their, they put all their buy stops here, and then the market turns and goes after all those buy stops. And retail traders, because everyone loves to chase price, they jam all their stops, all their orders, and chase the market. Now, again, let me take your attention to here, right? 9 o'clock, 9:30, this is PM. Right here. This candle right here. At this point in time, you can see this post, this was taken in Discord, right? 14th to the 10th, 9:21 PM. Feeling cute. Much short biddy right about now, I don't know. This candle right here was when I thought the market was going to go down, based on everything I've said in the last 25 minutes. And what does the market do? It goes down. You can see this wasn't a hindsight. This isn't a hindsight post, right? 21.53. Okay. I called this move based on everything I've just said in the last 25 minutes. Based on ICT's logic, based on what ICT has taught. And it is scarily accurate how accurate this is. Now, if retail traders are going long, and you can see the market's made some imbalances here, what's the market likely to do after it's taken out all of the liquidity here? It's likely to go lower and chase sell side liquidity, right? Let's go back to an hour time frame. That price action there is what I've just gone over, right? After price had rebalanced all of the price action in here, on higher time frame, started rebalancing all the way down here. Now, watching price play out, knowing and understanding everything I've just described, and knowing that that's what ICT teaches, and that's my understanding of it, and there's still so much more for me to understand. It's unreal. It's a surreal feeling when you see these candles and you know what's happening. You don't need to know where this goes. You just know it's going to go in a direction, and you just flow with that, because you can see and understand both sides. It's not, most people look at this, oh, it's going up, oh, it's going down, oh no. You can make money both ways. You buy here, you sell here, or you sell here and you buy here. You make money both ways. Okay, but I'm at that point where just watching this happen and watching this play out, I didn't care about money. It was just unlocking that level of understanding. And just, it was so easy and so effortless. So many people struggle against this, but at this point in time, over these hours that I watched it play out, it was just an insane feeling. It was surreal. It was easy, but it's been such a struggle to get to this point. And again, ICT's teachings and his perceptions and understandings of the market, it's how else can you predict crypto? Crypto is the most volatile asset in the world, and with my understanding of ICT, I'm predicting it to the very minute, the very candle that turns. And I've just explained why in the last 25 minutes, why it did what it did. So I don't really know what else to say, but I just, for achieving this level of understanding, And I remember ICT saying this in the start of the mentorship. He's not going to guarantee profitability or anything like that, not at all. He's going to guarantee a better, deeper understanding of the market. And this is by far and above anything I can think of. Like anything anyone can think of. I mean, how you achieve this level of precision, of understanding, to the very minute. How to achieve this level of precision is just, it's unreal. And I can't thank him enough. I don't know how to show my gratitude, because this is literally life-changing for me. I hate to say it, but watch this space. But I just hope one day I can show my gratitude to ICT for sharing this, because it's incredible. But I'll end that here. I'm sure I've taken up enough of your time. ICT, if you have watched this, I can't thank you enough. I know you're not going to waste your time on me. I'm just a pleb. But for everything that ICT's taught, I can't thank him enough. It's incredible. And for anyone who's through this and struggling, and you feel like you're beating your head against a wall, just keep going, because once this unlocks, once you realize and you can flow with these candles, and it doesn't matter what time frame. Okay, this could be the minute, this could be the 30-minute, this could be the hour. Once you unlock that sensation of flowing with the market, because you understand both sides, you understand what retail traders are doing and why the algorithm is engineering that to induce them into the market, to take their liquidity, to move the market in a direction. Because that's what the algorithm does. There's no emotion with the algorithm. Okay, it just moves the market. It needs liquidity to move the market. How does it get liquidity? By enticing or inducing retail into the market. Okay? The market's not trying to take liquidity to go higher because the market's getting rich. The market is printing information. That's all it's doing. The market is going in a direction, is taking liquidity to move in a direction. Sure, that's influenced by smart money and people, whales, people with lots of money. But that aside, all the market does is moves in two directions, up or down. It needs liquidity to move up or down. Food for thought. But I'll leave you with that. If you're still here, thank you so much for watching this. I appreciate you taking your time. I do know how valuable time is. If any of you have children and you're at a job that you hate, and you spend time at that job and you can't spend that time with your children, then you understand just how valuable time is. And you also understand why, as traders, we do this. But yeah, I'm gonna cut it here. Thank you all for watching this, and I really do appreciate your time. Any questions, just leave them in the comments. I'll get back to you. I'll help you out. But yeah, I hope this has helped someone. I hope this has provided some insights. But again, if you've had that level of understanding unlocked for you, and you can just flow with the market, then yeah, it's a surreal feeling. Just looking at this now, relatively equal highs here. The market took those highs. While it took those highs, it created an imbalance. Price retraced into that imbalance to go higher. Engineered liquidity to go lower. There's no emotion in this, just logic. It's taken me 5 or 6 years to reach this point. But yeah, thank you very much for sticking around, guys. Inner Circle Trader, check it out.